Awesome. Hi all, thanks for attending today's presentation. Today I will be doing a talk on how to navigate the crypto fundraising process. Just a brief introduction, I'm Patrick, Head of Investments and Strategy at SkyVision Capital, being one of the co-founding partners of SVC. Our fund aims to promote decentralized and open technology, being a blockchain agnostic fund. We've invested and supported projects across DeFi, GameFi, NFT marketplaces, and core infrastructure pieces to build out the ecosystem to accelerate the crypto adoption. We'd love to share some insights to future project founders of what we've learned from working with over 50 projects and some common pitfalls to avoid. The agenda of today's talk will include 7 main topics, which consist of key trends and thematics of 2022, regulatory considerations, fundraising from venture capitalism, hiring A-class team, building a strong community, audits, and launch plan strategies. We're still in the early stages of crypto adoption. We're seeing more and more traditional institutions such as Fidelity, Goldman Sachs get exposure into primary chips of Bitcoin and Ethereum. Studies have shown that the percentage of Americans who own cryptocurrency has not even yet reached 10% of the total population. In terms of the top 4 vectors, which SkyVision Capital have a strong focus and interest include GameFi, guilds and analytic tools, metaverses and SocialFi, NFT and analytic tools, and finally, interoperability and cross-chain compatibility. Play and earn is here to stay. Axie Infinity and Krabata have been revolutionary in terms of changing lives, especially those from lower income demographics. We have heard many stories of individuals earning more playing blockchain-based games than their regular jobs. We are particularly eager to see more AAA-based games enter this space with good and unique tokenomic designs. We are also seeing a trend of guilds performing with a unique offering of having scholars or players who can add value by testing games and providing feedback and purchasing multiple NFT assets to support projects. Finally, tools built over the GameFi layer, such as infrastructure level plays of Tavern and play-to-earn analytics, which include data-centric dashboards for individuals, help them calculate the best return on investment strategies and determining whether it is worth investing time into the game early on. Metaverses and SocialFi. After seeing the big announcement of Facebook with the name change to Meta, there has been a strong narrative behind the concept of metaverse. We see the metaverse as an online space where people can socialize, work, learn, shop, and play as avatars. As a result, we know that luxurious brands are looking into how to tap into this market, as it will be a main platform of advertisements and sales generation. We see that Facebook move is a big opportunity, but also a very big threat to the Web3 space. Zuckerberg's metaverse is still based on the Web2 model, where data is still owned primarily by the company. We are looking to continue to support and grow the decentralized and open metaverse, where we would see multiple metaverse that would be interoperable with each other. NFTs and analytic tools. Non-fungible tokens are a unique digital asset stored on the blockchain. Bored Ape Yacht Club, CryptoPunks are the blue chips of the NFT sector, with new successful NFTs such as Moonbirds have continued to fuel the NFT hype. The NFT market has helped spur on the bull run over the past 2 years, with the NFT market size expected to grow by over $150 billion over the next 5 years alone. Analytic tools, which integrate artificial intelligence of determining whether NFT asset classes are undervalued, overpriced, will be increasingly interesting. There have been many Ethereum killers and Bitcoin killers, but how we see it is that there will be no singular blockchain that will win. Since 2017, many new blockchains have evolved with very strong communities and different use cases for each blockchain. We still believe that interoperability and cross-chain compatibility will be the future for Web 3.0 as we move towards the multi-chain world. Cross-chain compatibility will enhance the potential economic use cases for multiple DeFi projects to collaborate with each other and broaden the reach irrespective of what blockchains they're built on. Now that you've got your Web3 idea, here are some considerations for the next stages of the token fundraise from the regulatory and legal perspective. This is not legal advice, but general aspects to consider, which include legal guidance, legal structuring, tokenomics, and understanding the Howey's test. We would recommend consulting legal specialists early on. We understand that a lot of what crypto ethos and DeFi does is disruptive to traditional paradigms, but still, there are guidelines and precedents of what can be done and what definitely should not be done. Lawyers will ensure that you stay on the right side of the law and ensure that you don't end up stepping on the toes of regulators and suffer heavy fines and even worse, imprisonment. Given that this is a niche area, if you ask different lawyers, you may get different answers based on different interpretations of the law and the level of risk tolerance. Find yourself a team that you are comfortable with and who has been in this space for a long time. The legal team will guide you in the right direction that has proper legal structuring of where to incorporate based on ongoing regulatory changes of token issuance. Once again, there is no right answer, but find a team who will be able to give you a sense of direction and reasons of why one particular jurisdiction is better than the other. There are multiple considerations that come into play, such as, firstly, intellectual property rights, and secondly, taxation, whether it's personal capital gains, personal liabilities, or company liabilities. It's best that you speak to a tax advisor or consultant who can future plan the tax implications for the fundraise and for your team members, as tax is specific of your country of residence or where you are domiciled. Tokenomics are the backbones for a successful project, and there should be a big focus on it from, firstly, the economic perspective, and secondly, legal perspective. In the development phase, ask the question, what is the true utility of the token? Some examples may include that it gives the token holder a right to vote on decisions that shape the future of the protocol, or access to certain features of the protocol and even discounted fees. Prior to determining the token mechanics, always refer back to the Howey's test, which is the SEC's framework for determining whether a token would qualify as an investment contract, also known as a security. I'll briefly mention the four-prong test. The way the test works is that if the contract satisfies all four prongs, for example, it passes the Howey's test, it is therefore constitutional as a security. If the contract does not satisfy any one of the prongs, it fails the Howey's test and therefore is not a security. The features of consideration are, is it an investment of money? Is there an expectation of profits? Is the investment of money in a common enterprise? And finally, is it from the efforts of a promoter or a third party? Now to move on, you've got your legal structure in place and you've got a great Web 3.0 concept that you'll be building. The next step is to start the fundraise process to give another 18 to 24 months of runway. However, even with this process, there are common pitfalls that an unknowing project team may experience. The first one would be accepting early capital. Capital is abundant, but finding those right partners who give strategic advice is scarce. Hearing VCs providing you with $1 million ticket size sounds great when you initially start talking to investors. However, some projects find that these early VCs promise the world and underdeliver. They don't speak to the project teams until the token generation event, and the usual step in the sequence is hearing that these early VCs dumped all their tokens on day one without contributing at all, aside from the capital. Other red flags from these VCs are those who request for early token launch dates, having a high percent of tokens at TGE, and those who are concerned regarding marketing strategies alone with no expression of interest in the product you are building. I'd recommend teams to continually ship product, get community feedback, and never rush into launching a token just for the sake of it. Finding the right strategic partners. I recommend that you speak to all the crypto VCs within the space, see what their long-term goals and visions are. Does it align with what you guys are building? Engage in those specialists in this field, whether it's DeFi, gaming, social, DAOs, etc. And another tip is don't ask VCs what they think about another VC is. Certainly, certain VCs align closely with some, which creates segregation within the space. The best approach is to ask portfolio companies who they had worked with and if you could connect directly with the co-founders themselves to get honest feedback. Finally, give regular updates and feedback to those VCs that have been supportive of you. We recommend touching base at least on a monthly basis, even if it's a simple Telegram message, which makes a big difference. This way, they know how they can best assist you with anything that you may need. So you finished the fundraise successfully, and now you're looking up to scale the team for development. Here are some common pitfalls that may happen, and hopefully we can share this with you so you avoid these mistakes. Firstly, which would be scaling too fast, recruitment of devs, and knowing your employees. Scaling too fast. Quality over quantity. Sometimes we see teams get carried away with mentioning that they have hired over 30 employees within the last month alone. This definitely sounds great on paper. However, we would recommend hiring those that add the most value. For example, it might be better to hire a leaner, smaller A grade team than a larger B grade team. Recruitment of devs is the most common problem that we hear from many of our portfolio companies. Find a good CTO early on. Unfortunately, with the excess of Web3 development, with the high demand, there has been a supply shock of talented developers. We typically recommend recruiting talent via your trusted personal network, such as those you met at a hackathon and had good chemistry with. It would be much easier, cheaper to hire experienced Web2 developers to train them up rather than finding a quote unquote blockchain Web3 specific developer. Know your employees. I'd like to share a horror story for a project team that we had worked closely with. It seems like the team had made a great hire. He checks all the boxes of having Web3 experience with previous DeFi protocols. He understands Rust and Solidity. He's been responsive over the past 6 months, and he's charging at a fair market rate. Unfortunately, at token launch, you don't expect the token price to suddenly drop. The core team does a retrospective analysis. The trusted developer went rogue and last minute changed the token address for the airdrops to their personal wallet. He unfortunately market sold the tokens right on the DEX. The team tried to find more info. The LinkedIn profile was found to be fake and the email address stopped working. Since then, we've told our portfolio companies to be extra cautious when hiring devs over the internet and ensure that they are able to be traced back to the individual. This would include collecting passports, IP addresses, and having photos of the employee. Building a strong community. Community is first and foremost for any successful crypto project. Keep your community up to date on Twitter, Medium, Discord with any new product features, roadmap, partnerships, and so on. Identify the members of the Discord Telegram groups and have potential ambassador programs from multiple regions. Continue to offer beta testing and ask for product feedback. Community members have time to do this and would offer what they would like to see most in your product. What we have found that have been extremely helpful would be to have these ambassadors even hop on calls with new members to describe the product to the next Discord or Telegram member and so forth. Finally, answer questions from community members. We've seen it done successfully where Do Kwon, head of TFL, is continually active on the Terra Research Forum and responds to community proposals quite regularly. Auditing the smart contract code. In 2021, hackers have stolen $3.2 billion worth of cryptocurrency. In 2022, within the first 3 months alone, 1.3 billion has been stolen from platforms, protocols, and exchanges. The largest one to date is the Ronin attack, which cost $624 million US. Code exploits are an increasingly common vector of attack. As you can see, most of the protocols have been unaudited, which could have potentially been a mitigating factor. We would recommend speaking to an auditor early on. Firstly, because there is a big backlog of projects in the pipeline where some auditors have no availability till 2023. Secondly, it allows the team to budget in costs as audits can be quite costly, ranging from $20,000 all the way up to $500,000. And even after your smart contract audit, although your smart contract may be bug-free and securely developed, hackers can always find a way to exploit potential security loopholes and vulnerabilities. Consider periodic testing for the project to determine any vulnerabilities early on to prevent loss. You've secured your fundraise and finalized your audit, but you want to continue building up your community. The next thing you need to consider is the token launch strategy, which may include a public sale of some sort. With the public sale, you need to consider a few factors, such as how much you're raising, which platforms, and most importantly, are there any restricted countries that you should not conduct this public sale to? Just as a recap, ICOs or initial coin offerings were common in 2017. This was the most common way to distribute coins to the public whilst raising funds. It was extremely unregulated with stigma behind ICO sales due to the amount of scams that we had all experienced. This evolved into IEOs, initial exchange offerings. In more recent years, new projects will partner up with centralized exchanges like Binance to help sell the new tokens. The benefits of this include the well-established exchanges like Binance undergo rigorous due diligence, and thus the projects are vetted more with less risk of scams. This also helps with initial and ongoing liquidity of the token. This evolved into IDOs, initial DEX offerings. Platforms such as Selenium, LaunchBlock, and Starterra leverage the power of decentralized exchanges of Uniswap, SushiSwap, TerraSwap, and so on. Project teams allocate a proportion of tokens to these platforms to be sold off to the public to help build their communities. Projects will then list on the relevant DEX. However, there is still risk that projects may not perform as well. There is no singular successful strategy for a go-to-market plan, but typically a combination of having both IEO and IDO have been the most beneficial to project launches over the past 6 months. In summary, seek proper legal counsel, create clear utility function for your token, continue to build strategic partnerships within the ecosystem, find the right strategic partners and backers, keep your community engaged and updated with roadmap goals, and definitely audit the smart contract before going live to prevent any exploits, especially in DeFi protocols. Thank you for your time tonight. I'd like to give a shout out firstly to the BNB Chain team, as well as the DoraHacks team for organizing this successful event. We wish the best to all the projects that have taken time to participate and submit their presentation for the hackathon. We've seen many interesting projects and look forward to potential collaborations. Feel free to follow us on the social media. And if you'd like to connect, please feel free to send us a DM on Twitter or LinkedIn. Thanks, guys.